hope you're doing fine. I hope you're doing wonderful. I hope you're disco. And this is a presentation for the stock market, and its purpose here to make you cautious, but not make you fearful. The sky is not falling. It's not going to be a total meltdown as of yet. It is just to be cautious. If I was one of these guys, I really don't want to be a part of them anymore, and I don't want to be. I don't want to be that guy that tells you that sky is falling. All I'm saying is the probability of pullback is higher. The probability of a retracement or a correction is extremely higher based on many indicators. Okay, let me start with the put to call. So this is the equity put to call. I only used the 20-day moving average and the 50-day moving average, and I call this signal the disco signal. It's very bullish when you have a bearish crossover between the 20 and 50, and very bearish when you do the other way. Bullish and bearish relative to the market. So it is bearish when you have a bullish crossover for the equity market. Okay. And if you have a bearish crossover, it is bullish for the equity market. So the disco signal is on. It's still on right here. It's been on since December 3rd, which is close to the time of the correction. And we're still in a correction in the Dow and the equity market, especially the Nasdaq. Okay, another thing is the VIX. This I call this is the disco combo, which when you have a simultaneous movement in MACD, RSI, and stochastic at the same time, based on historical performance. Every time you have this type of bullishness in these indicators, which means you're coming out of oversold in the stochastic, that's bullish for the VIX. This one is not there yet. When you have over 50 in the RSI and a bullish MACD, which is the most important thing, something happens to the VIX and you have a bullish price expansion to the upside. This happened in November and went up over 100%. This happened in September, and you could pause and look. It is so on and so forth. So this is since November 2020, this produced a price expansion to the upside 100% of the time. It's extreme high probability. So I talked about the VIX, which is this thing, what I call the disco combo. I talked about the disco signal, which refers to the equity put to call, plotting the 20-day and 50-day moving average. Okay, good deal. So now it's TLT. Let's talk about TLT. This is the weekly time frame for TLT. And what happened this week, we broke the trend line. So this is not the end of the world, but tells you there's something to be cautious about. So the alarm was sounded in November 29th when you have this bull trap. So you clear this consolidation that you've been through since July. Then you went back in, and you went back in trading range, and you not only had a bull trap, but also you broke this uptrend line. So you have to be careful about that, but it's not the end of the world yet. You are at the buyer's zone now. Once you clear this area, which is 141.01, you would have what's so-called 1, 2, 3 reversal, which means you're testing other buyer zone. And another thing, even if we break this one, if we call this A and this is B, no wait, this is A, sorry. And I'll talk about it. I'll put it in the daily time frame. I'll talk about this one. Another thing, another bad thing in the daily, in the weekly time frame is RSI going below 50 and a bearish MACD. This never been a good news for bonds or TLT. Never. So the probability of yield going up and bond prices go down is high, but it's not 100%. But using this thing, even if it bounces and the yields go to zero, that doesn't mean this is mumbo jumbo. This is really based on historical performance. I would not buy TLT now because of that. But I might be wrong. TLT might rally hugely, but I might be wrong. But I'm using technical behavioral finance. So we are at buyer zone now. But if we break this one, you have 1, 2, 3 reversal, and the probability will be at extreme that we test this low of May 10th. If we can't, March 15th. Okay. Let me show you the ABC that I'm talking about. Which, yeah. So the low of November 23rd is A. The high of the bull trap December 3rd is B. So C could be a 127 Fibonacci expansion or extension of A to B. I think it's close to this area. So it's really we really going through we might go close to an extreme buyer zone that might produce a bounce, a counter rally because of the buyer zone, but we're not out of the woods when it comes to yields. So we will wait and see. I really can't tell. I really have to wait and see. As I said last week in my video when I discussed gold technical analysis, I was really worried, and unfortunately, this thing's really went down and broke a lot of support. Another thing I'm watching, I hope that the RSI does not go below 30. If it goes below 30, the correction continues and we might test the low of that, the price action. Meaning, if it goes below 30 and the low is, I'll say 140, so we bounce to 150, we have to test the 140 under one condition that the RSI does not go below 30. Again, this is my own finding, by the way, and it tends to help me a lot. So an example of that yeah, 11th of June, 11th of Jan 2021, we went down, we went below 30, so we bounced and boom, 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 we went down and we went below 30, and yeah, we had to test that low again. Okay, so TLT, I discussed it in the weekly, daily time frames. Let me discuss the Qs. Okay, the Qs in the daily, which is the NASDAQ 100, the most important stocks in the NASDAQ. So the Qs got hammered last week, and as I'm stating right here, it had a bearish MACD, which usually does not spell good for the market. We might be close to a bottom. We might not be. We have to wait and see. And last time this happened, we went down 5%. And this time, yeah, just it took place last Wednesday. So the probability of more retracement is higher. But we are absolutely in a very, very good buyer zone. This resistance and this support, but still, we have to wait and see. We have to wait to see where the bond yields are going to. So this is the daily time frame for the Qs, and this is the weekly time frame. The uptrend line is still intact in the weekly time frame. That's the good news. The bad news, we have extreme negative divergence between the price action and the different indicators. And the RSI is getting closer to go below 50, and this does not spell good for the Qs in the weekly time frame. Last time this happened, okay, and before that, another correction happened. So usually it has a extreme high probability that you will go through a correction every time you go below $15 RSI. So it's really not good news, but no one knows the future. So I really don't want to be that guy. I really don't want to be that guy. And if you're that guy, please stop it and have an open mind. Okay, even if I was one of them, I don't want to be one of them anymore. Good deal. So this is now the Dow Jones Industrial. As I tweeted this before, usually whenever you have high volume in the way down, like an extreme volume, a bottom is very close. Unfortunately, for the equity market, we did not have that yet. We want to have these spikes. Once you have these spikes, a bottom is very near. Unfortunately, the spikes are not here. So we're talking about normal market conditions. I'm not talking about a total collapse of the market like what happened in COVID-19. You would have spikes and you will continue going down because recession was in the horizon at that time. But now we don't know what's going to happen. But once we have this bottom, I would really feel absolutely beautiful and happy and be looking for a bounce, a tradable bounce. But now there's none. Okay. And it's definitely not very bullish here in the Dow Jones in the daily time frame. Let me look at the weekly time frame. Okay, it's both bearish Rami and a shooting star. You made a high, all-time high, then you went back in the trading range. Shooting star, bearish Rami, and could be classified as bear trap, but we don't know. We cannot think that the sky will be falling. We don't know what's going to happen, but it is not good to be bullish now based on behavioral finance. Okay, so this is the weekly time frame for the Dow. Let's look at the transports. So the Dow theory goes like this. It's a lot of elements, but one of them is the concept of confirmation. It is every time the Dow Industrial or the Dow Transport makes new high, the other indice should confirm it. So the Dow made a new high, yet the transports did not. So that's a lack of confirmation, and we had a negative divergence in the price action in the transports, high and higher high, yet we did not confirm that in the stochastic, and it went below 80, which is not, it's never been a bullish sign. So it assumes more retracement, so no one knows the future. And we are very close to bearish MACD. As of yet, it's not there. Every time this indice has a bearish MACD, or let's talk about bearish, a price retracements follow. So it's really not there. As of now, the sky is not falling. The market's not going to go through a meltdown. Please don't listen to these people. But now, based on the charts, the chances of retracement is really high, and I really hope that we will have that spike in the volume. Then and after that, we could buy our favorite stocks. But as of now, it is very dangerous, and also, based on the Dow theory, we might go through a correction because of the lack of confirmation. Please like if you like, share, subscribe, and do remember, this goes forever.